Hey everyone, every January Creb puts on what they call the forecast breakfast, and they bring in a chief economist and they take a really good look at what happened in the previous year, and based on all kinds of data they establish what they think will happen in 2022, and that's what this video is all about. So I hope you enjoy it. Let's just take a quick look at the beginning of this presentation. And they're talking a lot about the forecast risk. And it's good to look at what can go wrong and what can go right. So you'll notice at the very top left here, inflation, lending, and COVID-19. And I'm just going to read this with you. There is a significant uncertainty in the economy as the impact and the duration of ongoing supply issues in the market are unknown and somewhat dependent on further disruptions caused by COVID-19. At the same time, energy prices are expected to rise. Higher energy costs, along with longer than expected supply disruptions, could result in higher than expected inflation. And of course, if we do see higher than expected inflation, it's a well-known fact, the only way to really curb it is to start raising interest rates. And this would be definitely a risk to those of you who are thinking of selling this year. If you're thinking of selling later in the year, the risk that you might be faced with is as interest rates rise, the demand for real estate starts to diminish. And this could definitely put a damper on the party, because as you probably already know, right at this moment, we do have a short supply of inventory and a high demand, especially in the detached sector. And I will be doing a video on this coming up this week as well to show you what took place in January. Now, the upside, and this is on this side of it, says should the housing market take longer to return to a balanced conditions, we could see stronger than expected price growth. And that is what we're experiencing right now in Calgary especially, and the surrounding areas, is the fact that there is a short supply and there's a demand for housing, and of course it's bringing up the prices. It's a well-known fact that a lot of these buyers are trying to get into the market before the interest rates go up. And that is why the downside risk is definitely something to consider in your decision making. It would be, if I were a seller, I would be taking a hard look at my decision of putting off listing my house, knowing that interest rates could definitely impact the value. And if I'm a buyer, I'm probably doing the same thing that everybody else is probably getting in before the interest rates rise. Because even if prices level off, or even if they even slightly dip, if you have a lower interest rate, that is still better than being in a situation where you may end up buying a home for a lower price, but pay a higher interest rate. That actually costs more money. One of the other interesting statistics to follow is the population growth. And as you can see at the top where it says, as the third quarter of 2021, Alberta finally started to see a shift in population figures. After 5 consecutive quarters of losses, net interprovincial migration improved and international migration returned to levels not seen since the fourth quarter of 2019. So this chart is showing just the what we're expecting this year, and we are looking at seeing 23,119 people move into Alberta, and therefore we will definitely see more people moving here than leaving. It's hard to know where they will end up. A lot of these people are going to Edmonton as well. It's not just Calgary, so it will have an impact on our market. We're also seeing some people from Vancouver and Toronto that are investing in real estate in Calgary and Edmonton right now as well. I think they're attracted to our lower prices, and they're seeing an opportunity to invest here and even hang on to some property and maybe keep it as a revenue property. And I know me personally, I've done a few transactions just since December from people outside the province that exactly were targeting Alberta for those reasons. So getting back to the interest rates and inflation story, here's a chart, and this is coming right from Stats Canada, and you can see in blue, that shows you the inflation rate as fluctuated since 2000. So you'll see that there was definitely a jump in 2021 in inflation. And you'll notice that they are predicting a drop in inflation because the green line is showing the interest rates. So they are predicting a rise in interest rates, which is definitely supposed to bring inflation down. And that's what we're talking about that could impact the real estate market. Let's take a look at employment levels. So in green, this shows you the unemployment rate. So to put it in perspective, if you go back to 2014, which is where we had a really strong market, you know, the Calgary and surrounding areas, we were sitting as low as about 4%. In fact, I think even at one point, even in 2012 or 13, we were even under 4%. And you can see we just more or less hovered around, you know, reaching some high levels in 2016, and then it went back down by 2019 to 6%, and then of course COVID hit, and we saw that big spike where we got almost as much as 16% unemployment. But we're still sitting at around 8% right now, which is not great. You know, for a vibrant city like Calgary, we really should be sitting under 6% unemployment. So this is interesting, and it is a concern. The big question is, you know, what will happen this year? Well, this is the forecast they're putting out by industry, and you can see, interestingly enough, accommodation and food services, they do believe is going to create a lot of jobs. I think the experts are predicting that restrictions are going to lift, and we're going to see a little bit more normal, and that definitely could fuel a lot of people coming to visit Alberta and people going out more and traveling, and that's why they've got a prediction here of seeing some changes in this area. I think the cool thing about Alberta is that we are diversifying finally. We still have energy as a big factor in our employment for Alberta, but it's nice to see that there are a lot of other industries that are coming, technology, and why not? I mean, especially Calgary, it's a beautiful city, it's a wonderful place to live. We should attract more industry than just oil and gas, and that's what we're doing, and I don't think that's going to change. So a big question I'm getting asked quite a bit is about new home construction and where does this fit in? So the industry is now facing a number of product and material shortages that are causing delays in home completions and increasing labor and material costs. I can tell you right now, I've talked to some builders, they're quite concerned. They don't know what things are going to cost 6 months from now. So they're very reluctant to agree to a contract with pricing because they just don't know. And they also just don't know when they're going to see some of the product that they need to build these homes. Housing starts rose by 65% in 2021. It was reaching the best levels we've seen in over 6 years. And so while starts improved across all property types, there were notable gains for rental properties, which means that they were building, a lot of builders are building them for the purposes of doing rentals. But I can tell you right now, there's definitely a shortage of new home construction. And one builder in particular, because one of the agents in my brokerage was, it took a client there and they just said, sorry, we just can't sell you another home. We can't give you pricing, you know, come back and see us in a couple of months. I've never seen that kind of a response in new home construction since I've been in this industry for 21 years now. The rental market's also gotten a little interesting. You'll notice the vacancy rates rose dramatically in 2021. And the reason for that is relatively simple. When interest rates are really low and the buyers feel confident to buy, they feel it's the right time, often when you've got tenants that are paying the same amount of money in rent as they can for ownership, they'll choose ownership. And that's really what has happened in this market. And the low lending rates have definitely brought first-time buyers into the market. And that's really what's driven up the vacancy rates. So what'll end up happening, though, again, mentioning interest rates, is as they rise, it'll take out a lot of these first-time buyers. They just won't qualify. Or what'll end up happening is with the higher interest rates, the mortgage payments will end up being much higher than their rent, and they'll lose part of their motivation to get into the market. So let's do a recap on 2021. Unprecedented, 27,686 sales, up 71% year over year. I mean, that is dramatic. New listings were up year over year, 34%. Inventory down �52.96, that's down 7%. So simple formula, lower inventory, higher sales, higher prices. Look at the month of supply. Normally in Calgary, we would see for a healthy market around 4 to 5 months supply of real estate. In fact, a lot of markets in the US would consider a seller's market anything less than 6 months. Generally in Calgary, we would consider a seller's market less than 4 months. And so to be at 2.30, it's a strong seller's market. And as a result, our benchmark price, and benchmark price just takes into the account the average home in Calgary, and we also factor in the amount of high-end homes that sell to the amount of low-end homes that sell. So, because if you look at it just an average sale price and a number of expensive home sales, it brings up the average price. So the benchmark is more accurate. But that is up 8% year over year, which is significant as well. And don't forget, that's also factoring in condos. And condos were not really moving that well until the fourth quarter of 2021. And now suddenly even condos are moving because some of the prices have moved up in the detached and attached sector. So why was demand so strong? Last year we saw some of the lowest mortgage rates on record. Levels did rise from the lows reported earlier in the year, but rates remained far below what was available in the market before the pandemic. This is one of the main drivers of the strong housing market demand growth that was recorded in 2021. So here's what the experts are forecasting for price growth in the Calgary and surrounding areas in 2022. You can see by this red graph, which is the price growth, that they are thinking, slightly below 5% is what we're going to see for a median price. So I mean, if we're sitting at 450, it's pretty significant that we could finish the year at around 470, 475 for median growth price. That's a pretty strong year. So they said higher prices should prevent a significant slide in new listings growth this spring, ensuring that conditions are not as tight as in 2021. However, the return of more balanced conditions is not expected until the latter part of 2022. The slow return to balanced conditions is expected to continue to support price gains this year, albeit a slower pace than in 2021. Overall, citywide annual prices are forecast to increase by over 4%, and of course they've got closer to 5%. Let's wrap up this video by just doing a recap of what we saw in the different segments of the market. This is detached houses, and you can see in 2021 we sold 17,000 detached homes, up from 9,948 in 2020. Dramatic, significant amount of growth, unheard of. The benchmark price, look at the demand. I mean, we went from 482 to 529. And you can see the inventory levels have dropped. We finished in 2020 with 2,700 listings, almost 2,800. And, we finished the year at 2,345. At this moment in Calgary, we're lower than that. Now, look at this chart right here. This is showing you the dark blue. Those particular communities or areas went up 10% or more in value. And you can see the Northwest and the North. I mean, I think the Northwest was up around almost 13% increase. Such a demand for this particular area. And also down here in the Southeast, especially these lake communities, they've really, really been a strong demand. And, and why not? They're nice communities. And I think what's also fueled this and why we're seeing a modest growth in the city center is, with COVID and the amount of people that are working from home, there just seems to be a lot of people that feel like they don't need to be close to downtown anymore. And there's a lot of people that are asking the question, is downtown ever even going to come back? Who knows? But that's a concern for Calgary. Let's look at the detached housing sector. Semi-detached housing sector. So in 2020, we sold 1,663. 2021, 2571, 54.60% increase. Significant again. The benchmark price rose from 389,100 to 424.33. And that's an 8% increase in pricing. Inventory dropped 19% from 570 to 457. It shows up here in the same chart. There again, we have growth in price up here in the north. Still pretty strong in the northwest and the west. And remember, these type of properties are generally people's second choice. Detached seems to be the first choice, and attached is the second choice, especially if it doesn't have condo fees, and most of them don't. The southeast was still also a 10% plus gain in growth of price. And once again, the city center just not as strong, under 7%, but still had increased in value. Let's look at the row housing market. So these are like otherwise known as townhomes with condo fees. In 2020, we sold 2145, 2021, 3986, an 83.5% increase in sales. Wow, that's high. Come over here to the benchmark price. Not a massive significant growth in price, just 6.5%, going from 278,167 to 294,983. Same formula though, lower inventory levels, but only by 2.23%. And this is why, this is most people's third choice of a property that they would buy would be a townhome. And that's why you can see the modest price growth, which I did think it was interesting that the East saw the most significant price growth for these type of properties. But even the Southeast and the Northwest was still moderately seeing, between 7 and 10%. But overall, let's be honest, that's still pretty significant to see those kind of price points. And there are townhouses all over the city, as you can tell. Last, the apartment segment of the market, which has struggled for a long time. Finally, we're seeing some traction here. Thank goodness. Sales in 2020 were only $23.93. And all of a sudden, 2021 comes and a 73% increase. So suddenly people are relooking at apartment condos. And that's good because, when the pandemic hit in 2020, and things were shut down and we couldn't go out, a lot of people weren't happy with being in an apartment building. But it seems like now that we're confident that restrictions will probably end and maybe, we've seen the worst of COVID-19 behind us. People are saying it's okay. I'm okay with living in an apartment condo again. And I'd rather, own something than not own something. And of course, that's bringing people into the market. Benchmark price, modest increase from 245 to 251, so 2.5%. And as I often mention, there's still a lot of people that bought in 2014 at the peak, and we haven't come up to those price points yet, but at least we're rising. And inventory, interestingly enough, went up, and I know why, because in the apartment condo world, there's just been a lot of people that have wanted to move on. They bought thinking they would stay maybe 3 years or 4 years, and they've had to stay longer because the market just wasn't conducive to sell. So a lot of people put their places on the market because they're ready to move into something else. And that in itself is probably going to continue. I don't think that we're going to have a supply issue at all this year in apartment condos. So I don't think we're going to see any major increases in prices here. Not to mention there's a lot of new construction that's available as well. But just good to see here, the dark green is more than 5% increase. And it's great because for quite a few, the last 4 years, we've been in the pinks and the reds. So it's so nice to be in the green here. And you can see that the West has experienced some pretty significant price increases there, over 5%, the South, the Southeast, but all areas of the city have been strong. So this is a good indication as to what has happened in 2021. I'm going to leave you with this thought. If you are thinking of selling, this actually might be the right time to do it. It is so hard to say what will happen with these interest rates, but at this moment there's such a demand for all these buyers trying to get in before the interest rates rise. This really could be your window of opportunity. Same for buyers. Why not get in now before these interest rates do rise? And a lot of buyers are coming into the market, but I have to tell you, expect multiple offers. I have a lot of experience in this, and managing multiple offers, I'm going to tell you something, there's a lot of strategy to this. And just recently I sold a house in Cougar Ridge with 7 offers, and when I met with the sellers and told them my strategy, they were very impressed with it. And it's because I've been here before. I've lived through 2006. I know how to manage multiple offers, both on the buying end and on the selling end. Reach out to me. I would welcome a conversation either over Zoom or even to come and meet with you in person at your home and walk you through how we actually can navigate these unbalanced markets and make them more in your favor. And I can tell you, experience matters when it comes to this. All right, everyone. Hope this was a helpful video, and look forward to sending you out the next one.